You want to know how to spot trends without any indicators. That's a fine question, and it's the right one too. In fact, it's the only question that ever mattered to me in the markets. Because indicators, those fancy mathematical tricks that some clever fellow dreamed up, they'll never tell you anything the tape hasn't already whispered. All they do is translate price into another shape, another form. But why would you want to listen to the echo when you can hear the voice itself? Price is the purest fact. It tells you everything. You remember in the previous video on big profits from simple rule, we spoke about keeping things direct, clean, uncomplicated. Well, this is the natural step forward. If you can train your eye to see the market's rhythm, you don't need to clutter your screen with crutches. Now tell me, when a stock is making higher tops and higher bottoms day after day, do you really need some colored line to tell you it's rising? Or when it's sagging lower, with every rally failing quicker than the last, do you need a formula to confirm the obvious? The business of speculation has always been about clarity. The tape tells its story. If you know how to listen, you won't miss a thing. The first thing I ever learned, and the hardest thing to keep practicing, is that the market repeats itself. Not the same way every time, no, but the general character of moves rising, pausing, breaking down, that rhythm never changes. And if you watch long enough, if you're patient enough, you'll see it too. Have you noticed how a stock never goes straight up forever? It advances, rests, shakes out the weak hands, then resumes. Same thing on the way down. Why complicate what is already so clear? But here's the trouble most traders get themselves into. They want certainty, not probability. They crave the comfort of a red or green signal. They want the machine to decide for them, and because of that, they hand their judgment over to a tool that only reflects price, instead of learning to trust their own eyes. Isn't it strange how men will put more faith in a contraption than in their own ability to think? Now, spotting a trend is about more than just saying up or down. It's about watching the behavior of the stock under pressure. Think of it like this: a stock in a strong uptrend doesn't just rise on good news, it shrugs off bad news. Have you noticed that? Suppose a company has some disappointing report. If the stock refuses to go down, if buyers step in and hold it firm, what does that tell you? It tells you there's demand, real demand, strong hands accumulating. And when you see that, you know the line of least resistance is up. On the other hand, a stock in a downtrend won't rally much even on good news. That's weakness staring you in the face. Why argue with it? The trend is telling you the truth. Do you see how simple that is? It's only our human nature that tries to make it complicated. We want to believe we can outguess the crowd, or that some secret formula will deliver us certainty. But speculation has no certainty. It only has probabilities, and the best probability of all is to follow the clear trend. Think of trends as currents in the ocean. You can fight them if you wish, but the ocean is stronger than you. The market is stronger than any man. If it wants to go up, it will go up, and if it wants to go down, nothing you do will stop it. So why not align yourself with the current instead of struggling against it? Haven't you felt that frustration, that pain of being on the wrong side? It isn't the market's fault, it's ours, for thinking we were smarter than the tape. And remember, these trends are not born in a day. A real move takes time to develop. You'll see it in the basing action, the quiet periods where the stock holds steady, refusing to break lower, building strength. Then one day the move begins, slow at first, and then faster. Have you ever noticed how easy it is to doubt the beginning of a move? It feels uncertain, choppy. That's because most people wait until it's obvious, until the newspapers write about it, until the crowd has already piled in. But by then, the best part of the move is gone. Patience, my friend, patience is the trader's greatest tool. Waiting for the market to prove itself, waiting to see which way the current flows, that's what separates the professional from the amateur. Do you think I never felt the urge to act, to jump in early? Of course I did. But the market punishes impatience. You must learn to sit and watch, to let the market reveal its hand. And when it does, you act decisively, without hesitation. Now, I've said many times that the market is never wrong. It's we who are wrong. That's why you must learn to see trends for what they are, not what you hope them to be. Hope is the deadliest emotion in speculation. You buy a stock, it goes against you, and instead of admitting the trend is down, you hope it will turn around. But hope doesn't change facts. Price is fact. Have you been guilty of that, clinging to a loser because you hoped it would recover? Every trader has, including me, in my early days. And every time it was the same lesson: obey the trend, not your hope. The beauty of price action is that it reflects everything. Every opinion, every forecast, every piece of news, it's all in there, in the tape. That's why I say you don't need indicators. The market itself is the only indicator worth following, and spotting a trend is nothing more than learning to read the language of price. Up is up, down is down. Higher highs and higher lows tell you one story, lower highs and lower lows tell you another. Do you really need anything else? But I'll tell you something more. To follow trends, you must also master yourself. Because the hardest part is not seeing the trend, it's staying with it. Most traders cut their winners short and let their losers run. Have you done that? Sold out of fear when the stock was only pausing, only to watch it climb without you? Or held a falling stock, convincing yourself it would turn, while the loss grew larger? That's human nature. That's why wealth in the markets comes not from brilliance, but from discipline. You see, trends reward patience, and patience is not natural to us. It feels uncomfortable. It feels dangerous to let a winner run. It feels safe to hold on to a loser. But safety in speculation is an illusion. The only real safety is to be on the right side of the trend. And that requires courage, the courage to sit still while your profits grow, and the courage to cut quickly when the tape tells you you're wrong. Doesn't that sound backwards to common sense? Yet that's the essence of trading. Now, let's tie this back to what we talked about before. Remember when I told you in that earlier lesson on big profits from Simple Rule that the market pays best when you keep things straightforward? This is that same principle, just dressed in a different coat. Simple rules, simple observation, nothing fancy. Watch the trend, align yourself with it, and let the market do the heavy lifting. That's the only way I've ever seen big money made, by following the line of least resistance. You'll notice, too, that real wealth doesn't come from catching small moves. It comes from identifying the big swing and riding it. That's why trend recognition matters. A little scalp here, a quick profit there, that's just scratching. The big profits, the kind that change your life, they come from sitting tight when you've caught the right trend. Have you ever felt that urge to grab a quick gain, only to see the stock double afterward? That's the test the market gives every speculator. Do you have the nerve to sit, or do you give in to your impulses? The market is a stern teacher. It gives the test first and the lesson afterward. And the lesson, always, is that you cannot bend it to your will. You must bend yourself to its will. Spotting trends without indicators is simply learning to respect the market's own message, unfiltered, undistorted. Once you accept that, the rest becomes clearer. Think of it like watching a man walk across the street. If he takes one step forward, then another and another, you can safely say he's crossing the street. You don't need a gadget to measure the angle of his stride. The same with a stock. Higher highs, higher lows, it's crossing upward. Lower highs, lower lows, it's crossing downward. Why complicate what's so plain? The danger is in overthinking. Many traders ruin themselves by searching for certainty, by waiting for all the lights to turn green before they act. But by then, the move is already well advanced. The market rewards the man who sees early, who has trained his eye to recognize the beginning of a trend. And the only way to train your eye is to watch, day after day, without bias, without emotion. Do you spend time each day studying the tape, or do you only look when you're eager to trade? That difference makes all the difference. The market speaks in its own language, and price is its vocabulary. Every tick, every print on the tape, every change in bid and ask it all tells a story. That's why I say trends reflect collective behavior, and you can read them without tools if you train your eyes to observe price itself. Too many traders look for shortcuts. They want the comfort of lines, oscillators, colors, and formulas. But those things are just shadows of what price has already told you. Why look at the reflection when you can look at the object itself? Think about what a trend really is. It's not numbers on a screen, it's not geometry, it's human behavior expressed through price. When people are optimistic, when they expect more, they buy. And when the buying outnumbers the selling, price rises. When people are fearful, when they want out at any price, they sell and price falls. That collective behavior, the push and pull of human emotion, creates the trend. Do you see how simple it is once you strip away the decorations? Now, how do you actually read it? You look for sequences. A stock that keeps making higher highs and higher lows is revealing demand that overpowers supply. Each rally pushes to a new level, and each reaction holds above the prior one. Isn't that the clearest signal you could ever ask for? That's a crowd telling you we want more of this stock. No need for a moving average or a line drawn under the lows. Your eyes can see it plainly if you let them. The same holds for downtrends. When supply outweighs demand, every rally fizzles quicker than the last. Sellers are eager, buyers reluctant. You'll notice the stock makes lower highs and lower lows. The market is voting with real money, and its verdict is weakness. Why argue with that? Have you ever caught yourself trying to reason against what you were watching? Thinking, this stock shouldn't be going down, the fundamentals look fine. The tape doesn't care about your reasoning. It only cares about the balance of buying and selling. And that balance shows itself in the way price behaves. The trouble is that most traders don't trust their own eyes. They think they need confirmation from a tool. But the tool is nothing but price run through a filter. What happens when you depend on the filter? You dull your instincts. You stop paying attention to the raw facts, and when your instincts are dull, you hesitate. Hesitation in speculation is costly. Have you felt that sting waiting for confirmation, only to see the stock move without you? That's the price of leaning on tools instead of developing your own judgment. Reading price action is about watching how a stock behaves in different conditions. Take the opening of the day. If a stock gaps up, then sells off a bit but quickly finds support and drives higher, what does that tell you? It tells you buyers are eager. That eagerness, multiplied across days and weeks, builds an uptrend. On the flip side, if a stock rallies in the morning but fades steadily, unable to hold gains, you're seeing weakness, and weakness repeated forms a downtrend. It's not complicated, but it requires watching closely, patiently, day after day. And here's something few will admit most of the time. Price is simply drifting, undecided, moving sideways. Trends don't exist all the time. They must emerge from balance. That's why patience is the trader's most valuable virtue. You wait for price to tip its hand. Does it break higher out of that balance and hold its gains? That's your clue to a new uptrend. Does it break lower and fail to recover? That's your sign of a new downtrend. But if you can't stand waiting, if you must always be in the market, you'll never see it clearly. You'll mistake noise for signal. Have you been guilty of that, jumping in because you felt restless, only to realize the market wasn't trending at all? The market is human nature on display, and human nature doesn't change. Fear and greed, hope and despair, patience and panic, they're the same forces now as they were 100 years ago. That's why price action works. Because it captures the unchanging element, people. A chart of a stock from 1920 looks the same as a chart of a stock today, because the emotions behind those moves are the same. Doesn't that strike you as remarkable? Technology changes, companies change, the world changes, but human behavior, that constant rhythm of buying and selling, remains. When you learn to read trends without indicators, you also learn to read people. You learn to see the crowd's conviction or its doubt, its courage or its fear. An uptrend isn't just numbers, it's confidence building upon itself. A downtrend isn't just lower prices, it's fear feeding fear. And once you see that, you stop needing tools. The raw price tells you more than any contraption ever could. But here's the catch: you must remove your own bias. The greatest enemy to reading price is your own opinion. If you want a stock to rise, you'll read strength where there is none. If you want it to fall, you'll imagine weakness where it doesn't exist. Have you caught yourself doing that, seeing what you hoped instead of what was there? Every trader has. The market demands honesty. Only by stripping yourself of bias can you see the truth in the tape. And let me tell you, the tape always tells the truth. It may whisper, it may take time, but it never lies. News can lie, opinions can lie, analysts can lie, but the market itself never. If a stock is in demand, its price will rise. If it's being dumped, its price will fall. There is no deception in that. The deception lies only in our interpretation. That's why I say trust price, not stories. Learning to spot trends without indicators is also learning self-reliance. You're no longer outsourcing your judgment to a tool, you're developing your own skill. And that skill grows sharper the more you practice. Every day you watch, every chart you study, you're training your eye to see the market's language. And once your eye is trained, you won't need confirmation from anything else. You'll know. You'll see it in the action, as plainly as you see the sun rising in the morning. Of course, it takes time. Just as a musician trains his ear, or a craftsman trains his hand, the trader trains his eye. The early stages are difficult. You'll doubt yourself, you'll misread the action, you'll second guess. That's natural. But persistence builds clarity, and soon enough, you'll notice that you can tell the story of a stock just by glancing at its chart. Not the details, not the noise, but the general character. Up, down, or nowhere, and that's all you need to know, because the rest is following along with discipline. The beauty of this way of trading is that it frees you from complexity. You're no longer a slave to a dozen conflicting signals. You're no longer paralyzed by over-analysis. You're watching the one thing that matters, price. And price reflects the sum of everything. Earnings, interest rates, news, rumors, hopes, fears, it's all baked into the price. Why chase after the ingredients when you can read the finished recipe right there on the plate? And so I tell you again, trends reflect collective behavior, and they can be read without tools. Your greatest edge as a trader is not in finding some new invention, but in training your own perception. Do you have the patience to watch? Do you have the honesty to accept what you see? Do you have the discipline to act on it without hesitation, without decoration? Those are the questions the market asks of you every day, and the answer is always there, in the tape, if only you'll learn to read it. The hardest part of trend following is not spotting the move, it's having the nerve to stay with it. Most men think they lose money in the market because they can't find the right entry, or because they don't know the secret formula. But that's not the truth. The real reason fortunes slip through their fingers is because they can't sit still once they've got the right position. They grow nervous, they grow impatient, they doubt what they already know. Haven't you felt that urge yourself the itch to take a small profit just to feel safe, only to watch the stock double after you've sold? That's the market teaching you one of its most expensive lessons. Spotting a trend is simple enough once you train your eyes. Anyone with patience can see a stock marching higher with each advance or sliding lower with each retreat. But to hold that position, to sit through the pauses, the shakes, the tests, that is where the game is truly played. It's not the market that forces you out, it's your own nerves. The ticker starts to back up a point or two, and you think, I'd better grab my profit before it disappears. But that point or two is nothing compared to the whole swing you were in line to catch. Do you see how the mind tricks you into cutting short your winnings? The market rewards the man who can resist that impulse. It rewards the one who can let a winner grow, who can sit through the normal reactions without flinching. That's not easy. It goes against human nature. Human beings are wired to seek safety, to lock in gains, to avoid regret. But speculation requires a different wiring. You must learn to welcome the discomfort of sitting still. You must train yourself to see the small fluctuations as noise, not as danger. Have you practiced that kind of patience, or do you still feel your pulse quicken at every retracement? Now, think about this: the big money is never made in the small swings. It's made in the great movements. A stock that doubles, triples, or more, that's where fortunes come from. But those great moves only pay the men who ride them. The ones who jump off at the first stop, They never see the end of the journey. That's why I say the hardest part is staying with it. The tape will tempt you to doubt. It will whisper that the run is over. It will shake you with sudden drops. And if you don't have the nerve, you'll listen, and you'll get out. How many times have you heard of traders who sold too soon, who looked back later and cursed their lack of courage? Courage is the key word. Courage to sit still. Courage to ignore the chatter. Courage to let profits run while everyone else is taking theirs. But courage doesn't mean recklessness. It doesn't mean holding blindly. It means holding because the trend is still intact. You see, staying with a winner is not about stubbornness. It's about discipline. As long as the trend continues higher highs and higher lows in an uptrend, lower highs and lower lows in a downtrend, your job is to remain. That's the discipline. But the moment the trend truly breaks, you must leave. Do you notice how both patience and decisiveness live side by side in that rule? Most traders fail because they reverse those principles. They are patient with losers and impatient with winners. They'll sit through endless pain, waiting for a bad position to turn, but they won't sit through even a small pullback in a winning trade. That's human nature again, upside down in the market. To succeed, you must invert it. You must cut losses without delay, and you must hold winners without fear. Doesn't it sound so simple when put in plain words? Yet in practice, it's the hardest task you'll ever face. The tape will always test your nerve. Imagine holding a stock that has climbed steadily for weeks. You're sitting on a fine profit. Then out of nowhere, news breaks, and the stock plunges for a day or two. The crowd panics. You feel that sick pull in your stomach. The urge to sell, to protect what's left, screams at you. But if the trend is still sound, if the stock holds its key levels and quickly steadies, you'll see it resume its upward climb. And if you sold, you've only proven once again that the market shakes out the weak before rewarding the strong. It's the same on the downside. A stock in a clear downtrend may stage sharp rallies. They'll look convincing. They'll make you doubt the weakness. But those rallies are only interruptions in the larger decline. If you've had the nerve to stay with your short, you'll see the trend reassert itself. Yet most traders can't stomach it. They cover too early, only to watch the stock collapse without them. Have you ever done that, closed out too soon? Congratulated yourself for a modest gain, then watched the real move unfold without your ticket in hand? The market punishes the faint-hearted, not because it's cruel, but because that's its nature. The big swings belong only to the men who sit tight. You can spot the trend, you can enter correctly, but unless you can endure the tests, you'll never reap the full reward. That's why I always say it's not thinking that makes the money, it's sitting. The market doesn't pay you for cleverness. It pays you for nerve, and nerve is not something you're born with. It's something you build. You build it through experience, through making mistakes, through feeling the pain of selling too soon and the pain of holding too long. Over time, if you're willing to learn, you develop the judgment to know when to sit and when to act. But you must be honest with yourself. Did you sell because the trend truly broke, or because your nerves couldn't take it? That's a question every trader must answer, and it separates the professionals from the amateurs. The professionals know that discomfort is part of the game. They expect the market to test them. They don't flinch at ordinary pullbacks. They don't listen to the chatter of the crowd. They keep their eyes on the trend itself, and as long as it's intact, they stay. That's the nerve I'm speaking of. And without it, spotting the trend means nothing. Anyone can spot a move, only the disciplined few can ride it. So understand this, the market will always tempt you to act. It will tempt you to sell your winners early, to grab a little comfort, to avoid regret. But comfort is costly. Comfort robs you of the great gains, the kind that make all the difference. And the only defense is nerve, the willingness to feel uncomfortable, to sit tight while others rush around, to wait for the full swing to play out. Can you do that? Can you bear the discomfort that comes with real profits? That's the true test of a trader, far more than his ability to spot a trend in the first place. Price action itself is the only true indicator. Everything else is just a reflection, a copy, a shadow of what price already told you. Men clutter their charts with lines and formulas, thinking they're gaining clarity, when in truth they're only adding noise. The ticker is the only fact in this game. Every trade printed is someone putting real money down. A buyer and a seller meeting at a price. That's reality. Do you really think a mathematical trick can tell you more than that? Indicators are nothing but translations. They take price, run it through a formula, and give you another picture. But why listen to the translation when you can hear the words directly? A moving average, an oscillator, a band, they're all just derivatives of price. They lag, they delay, they confirm after the fact. By the time the tool tells you to buy, the move is already underway. By the time it tells you to sell, the market has already shifted. Haven't you noticed how late those signals always seem? When you learn to watch price itself, you learn to see what others only see later. That's where the edge lies. The tape tells you in real time. You can see the shift in demand and supply, the struggle between buyers and sellers, the urgency of one side overpowering the other. Price is alive. Indicators are dead. They're history, neatly packaged, but history nonetheless. Do you want to trade what already happened, or do you want to trade what's happening now? I've watched traders become slaves to their tools. They stare at the colored lines instead of the market. They wait for a signal instead of trusting what's in front of them. And because of that, they never build judgment. They become dependent. And dependency is dangerous in speculation. What happens when the tool fails? What happens when it conflicts with another? They're paralyzed. They can't act without the crutch. Have you ever felt that hesitation, wanting to pull the trigger, but waiting for some indicator to confirm what your eyes already saw? That hesitation is the cost of over-reliance. Now let me ask you, when a stock is rising day after day, printing higher highs and higher lows, do you need anything else to tell you it's in an uptrend? Or when it's sagging lower, each rally weaker than the last, do you need a signal to confirm a downtrend? It's plain to see, but most traders don't trust themselves. They'd rather put faith in a contraption. And so they give away the only advantage they ever had, the ability to read the market directly. The tape is the composite opinion of everyone in the market. It includes the insiders, the institutions, the speculators, the weak hands, the strong hands. Every piece of information, every forecast, every hope and fear, it's all expressed in price. That's why price is the only thing that matters. If something is truly bullish, you'll see it in the chart. If it's bearish, the chart will tell you. Do you see why I say you don't need anything else? Take an example. Imagine a stock that reports bad earnings. The news hits the wires, everyone talks gloom. Yet the stock holds firm, refusing to break. In fact, it edges higher in the days that follow. What does that tell you? It tells you demand is strong. That's stronger than the news. That's the market tipping its hand. An indicator won't capture that strength until later, but price shows it now. And if you're watching, you see it. On the other side, imagine a stock with good news, glowing forecasts. The crowd cheers, but the stock can't rise. It rallies a little, then stalls, then sinks. What does that tell you? It tells you supply outweighs demand. Sellers are eager, buyers hesitant. Price reveals the truth, even when the news says otherwise. And you don't need any formula to see it. The simplicity is what makes it hard. People think the market must be complicated, that success requires secrets. But the truth is the opposite. It's simple. Price up, price down. Demand strong, demand weak. That's it. But because it's so simple, people don't believe it. They crave complexity. They want the feeling of control, of precision. And so they bury themselves under indicators, convincing themselves they're gaining an edge, when in reality they're only dulling their instincts. Have you fallen into that trap, thinking more tools would mean more certainty? Certainty doesn't exist in speculation. It never did. There are only probabilities. And price gives you the best probability, because it's the raw evidence. Every tick is a vote. Add those votes together and you see the direction of the crowd. Higher highs and higher lows mean buyers are winning. Lower highs and lower lows mean sellers are winning. It doesn't need to be fancier than that. The market pays you for aligning with the majority, not for being clever. But here's where the real work lies: training your eye to see. You can't just glance at a chart once in a while and expect clarity. You must watch. Day after day, week after week. You must study how price behaves around support and resistance, how it reacts to news, how it behaves in quiet periods. Over time, your eye learns the rhythm. It learns the difference between a healthy pullback and a true reversal. It learns to spot accumulation and distribution. And once you've trained your eye, you no longer need confirmation. You see the truth directly. Think of it like reading a person's face. You can tell if someone is confident, if they're fearful, if they're hiding something. You don't need a machine to analyze their expression. Price is the same. An uptrend shows confidence. A downtrend shows fear. A sideways move shows indecision. And if you look closely, you can even see when that indecision is about to resolve. Do you really need anything more than that? Now, this doesn't mean every move is clear. The market has noise. It has traps. It shakes out the weak before rewarding the patient. But the underlying trend is always visible if you look at the bigger picture. The mistake is focusing too closely, letting every small wiggle cloud your judgment.